Yes, so all we can do, guys, is we can work from the paper the ACCA release, okay? So the paper they've released, absolutely. But actually, I actually think this is a very good paper to work through because it does give you a very good insight as to what he's been doing. In December, the pass rate was 40%. Okay, so in the December 2020 exam, the pass rate was 40%. For the September exam, the pass rate was lower. So in fact, you know, it's definitely a good exam to review. Yeah. So it's definitely a good exam to review. Hi, Bryony. Welcome to the course. So I hope all of you can see and hear me clearly. What we're doing is we're waiting to start. And what I'll do is I'm just taking a couple of questions from you before we kick off. Okay. So has everyone managed, while I'm waiting, guys, has everyone managed to download the exam? Yeah. Has everyone managed to download the exam? And if you don't mind, yeah, while you're waiting, guys, you know, please ask me any questions. Alternatively, you can start reading through question one, okay? So while you're waiting to start, ask me any questions. Alternatively, you can start reading through question one. Hi, Carol. Welcome to our course. While we're waiting, guys, I just want to tell you that I did do an earlier session. Okay, so I did do an earlier session talking about how to pass ACCA Advanced Tax. So if anyone here did not attend the earlier session and you would like the recording and the notes from that earlier session, what you need to do is connect with me on LinkedIn, okay, and send me a message, okay? So if you've come for this session, I am offering you the first session as well, okay? So if any of you here that did not attend the first session, you're more than welcome to just connect with me on LinkedIn, send me a request, giving me your email address, and I'll send off both the cloud recording and the actual notes for the first session. Okay, any other questions while we're waiting, guys? Okay, I've got a question from Badresh here. So in the ACCA model answer, I noticed that some sentences are straight from the scenario, not related to tax rules. Will these still earn any marks? Yes, so as long as you answer the question, Badrish, that's the key thing. Because what the examiner does is he gives you like a puzzle, okay? So he gives you like a puzzle and he expects you to solve it. So in the requirements, if they ask you for an interpretation of the actual scenario given, you do earn marks even if there are no tax rules. Okay, I've got a question here from Herman. Herman says, I took the exam in December and got 45 marks. The IT crashed for 20 minutes in the hall and constantly froze. Yeah, once again, you know, I have to be honest with you guys. There have been lots of challenges from the ACCA in terms of hosting the exams, the exam centers and so on. How do you, by the way, guys, how do you guys feel about, about doing the remote invigilated exams? How do you feel about that? So how do you feel about doing the remote invigilated exams? Yeah, so Carol, you know, one thing I want all of you to do, so make sure all of you log on to TestReach. So you need to log on to TestReach and start practicing, okay? So it's very important, yes. And unfortunately, Herman, this is one thing that upsets me. I don't like, to be honest with you, I don't like using the online the online scratch pad, but you have to get used to doing it, you see. But like I'll show you today, one thing I recommend in terms of speed in advanced tax is using the word processor and doing any calculations in tables. So if you just use the word processor and you do your calculations in tables, I think that's quite fast and efficient in terms of that. Okay. Ashar is saying, I enrolled for the June 2021 exam, but you're worried if classes start. Can I change? Absolutely. So as long as you're on my June courses, Ashar, you'll automatically be switched to online. You see, you'll automatically be switched to online. Yeah. So the key thing is just make sure that the dates coincide with my course. I think the first date for the June exam is the 20th of March. Yeah, is that your date? As long as you got that date on, there's nothing for you to worry about. Yeah, yeah, perfect, perfect. Nothing to worry about. Good. Yeah, Badresh, I tell you, I'm. It's not easy. I mean, I just want to confirm with you guys. Do any of you guys have an external monitor connected to your laptop? Does anyone have an external monitor at home connected to the laptop? Yeah, this is what we're recommending, okay? So Carol, once again, this is something you do need to consider. I think because, the laptop screen is quite small. Yeah, the lap, but all you have to do is get a webcam. Yeah, Herman, you just get a webcam and you put it on top of the laptop screen. The best webcams to use, I use Jellycomb, a Jellycomb HD webcam, and it's available from Amazon for about £20. Okay, and it's HD. It's very. In fact, this is what I'm using now. Yeah, so it's much better than the inbuilt webcam in on there. Yeah. Yeah, yeah. So I recommend you do it. But even if, I mean, they cost about £20, Carol. So it's not that much money, but it does make a big difference because it's HD, you see. And what I'm saying now, going forward, Carol, if you think, Zoom calls and that kind of stuff is going to be part of our lives. So I think we do need to get used to doing that. Okay. So once again, guys, welcome to the course. Just a few housekeeping rules. So just make sure, guys, for security purposes, you can see and hear me clearly. So I've got the whole screen. I'm going to start sharing my screen with you in a minute. You cannot see or hear any other attendees in the today, okay? So you can't see and hear any other attendees here. Yeah, and that's for your own security purposes, okay? In terms of communicating, we communicate through the chat box. You cannot communicate with another attendee, okay? So you can't communicate with another attendee, but what you do is you communicate publicly. And I just want to tell you, this meeting is being recorded, okay? So we're recording it, and then I'm going to send off the cloud recording for you. We're going to cover a lot of technical areas, and we're going to be moving quite quickly. At times you don't have time to copy everything down, okay? So you may not have time to copy everything down, but please watch the recording after the lecture as well, okay? Just one more point. I did do an earlier webinar on the 3rd of January talking about how to pass ACCA Advanced Tax. If any of you did not attend the earlier one and you want access to that, all you need to do is just drop me an email or just message me through LinkedIn, okay? So I recommend you connect with me through LinkedIn, message me, and I'll send that off to you. So I just have to check. I think someone may have left there. Um, Yeah. Okay. Fine. Okay, guys, so let's make a start. Welcome to the online seminar. I think everyone's here. So welcome to our online seminar. My name is Neil Da Costa. I'm your tax lecturer of today. Okay, we're going to be communicating through the chat box, and what I'm going to do is take you through the recent released exam. So as one of you pointed out, actually, you know, some of these questions were actually from the September 2020 exam, but this is the exam ACCA have released. Okay, so would all of you like to look at question 1? Okay. So would you like to look at question 1? So has everyone got a copy of question 1? Yeah? Has everyone got a copy of question 1? Yes? Yeah, so please communicate with me, guys, through the chat box. So we're trying to make it as interactive as possible. Okay? Where's the copy? James is asking. James, you have to go to ACCA Student Resources. So ACCA Student Resources, Advanced Tax, and then Past Papers, okay? So ACCA Student Resources, Advanced Tax, and then Previous Exams, okay? So I actually send off some stuff prior to this. Okay, guys, so when we look at an exam question, can any of you tell me what we read first when we look at an exam question? Bryony saying the question, not the question, Bryony, the requirements, guys. Okay, so when you're looking at an exam question, the first thing to do is to start by looking at the requirements. You can see the questions are very long, guys. Okay, so you start by reading the requirements. Now, so what the examiners told us in the requirements here. Now, in the exam, can you highlight, guys? When you're doing the online exam, can you highlight the question? Yes, you can, okay? So I'll be doing exactly the same thing, highlighting the question. So the first thing there is the examiners asked us about knowledge obtained from advising other clients, okay? So can any of you guys tell me what area the examiner is trying to examine here? Ethics. So what I would do in the exam is I wouldn't bother reading through the rest of the question. I would always focus on the ethics. So as a general technique in the exam, you're reading the requirements, okay? That's the first thing you do. What you then do is you just scan the question very quickly. You highlight any important areas, but the most important thing is to start with the easiest bits first. So I want all of you to come out of the exam with 50%, okay? So if we look at the question now, what you can see there is the examiner's given you 5 marks for ethics. He also gives you 4 easy marks for presentation, okay? And what the examiner has asked you to do here is he's asked you to prepare the meeting notes. So prepare the meeting notes. Now, in the exam, typically, the examiner will give you an email, a memorandum, and so on. And what you're doing is you're now preparing the meeting notes for the tax manager when the tax manager meets with this client called Lamar, okay? And what you can see is you are given a date in the exam as well. So can all of you type out the heading for your answer and copy that into the chat box? Okay, so type your heading for the answer and copy that into your chat box to give you a quick 4 marks, okay? Because as long as you head it up correctly, it's very easy to get the 4 marks. Yeah, so absolutely. Yeah, notes to the meeting, very good. Yeah. So notes to the meeting. Yeah, subject date from, okay, guys, you're doing well. From tax assistant, very good. Yes, okay. Sorry, well, what's that? No idea. Okay, good. Yeah, so I'll just show you what your examiner was saying here. Meeting notes, very good. Yeah. So what you'd need, guys, is just a brief heading here, notes for meetings, and then client, okay, client, purpose, prepared by, and date. Okay. So as long as you head up your answer correctly, this then earns you 4 marks as long as you then use the same subheadings the examiner uses in the question. Okay, so are all of you happy with getting the 4 marks for presentation? Okay, so it's basically to, from, reference, and date. Okay, so he'll either ask you to write meeting notes, he'll ask you to write a letter, he'll ask you to write a report, or he'll ask you to write a memorandum. Okay, the way you head it up is exactly the same. As long as you do this, this will then earn you 4 easy marks. So all you need, yeah, to and from is fine. To and from is absolutely fine. Yes, that's perfectly fine. To and from is perfectly fine. Yeah, good. Okay. Yeah, don't forget to put the client's name in there. Yeah. So what I do is, to be honest with you, I say to, from, reference, and date. Okay. So you're writing to the partner. Okay. To the partner, from tax senior tax assistant, reference, you put the client name and you put in the date. Okay. Good. Now, the next thing the examiner wants us to deal with is ethics, okay? And what he's saying here is we have a number of existing clients. I always put the client name on the subject reference. That's perfectly fine. That's perfectly fine, Carol. Excellent, yeah, okay? But the examiner wants to see to, from, reference, and date, and he wants to see the same subheadings. He calls the subheadings signposts. So you have to put these signposts into your answer. Now, what the examiner is saying here is, in terms of knowledge obtained from other clients, can we use the knowledge from other clients for to help Lamar? Can we use the knowledge from other clients to help Lamar? Chela, why are you saying yes? Okay. Are we allowed to use the knowledge from other? Oh, confidentiality. Yeah, we can use experience gained, Carol. Okay, so we can use experience gained, but we are bound by the client, by client confidentiality. So remember, guys, I'm going to be talking very quickly. Yeah, oh, that's what you meant. That's what you meant. Absolutely. I'm going to be talking very quickly. Okay. And at times you may not have time to copy down everything. Don't worry, it'll be recorded and all sent to you. What is our mnemonic for ethics? Can all of you type in a mnemonic for ethics into the chat box, please? Excellent. OPIC, PIPCO, excellent, excellent. This is what I want to see. So I use COPIC, as Esther said there: confidentiality, objectivity, professional behavior, integrity, and competence. In terms of confidentiality, yeah, OPTIC is perfectly fine. I want you to learn a mnemonic. So ethics comes up in every exam. So with regard to confidentiality, we're not allowed to discuss one client's specific information with another client without written permission. And this also applies to ex-clients, okay? But we can use the general expertise gained in dealing with one client in helping another. So you are allowed to use general expertise. So can any of you tell me what 2 concepts you would talk about here out of confidentiality, objectivity, professional behavior, integrity, and competence? Which 2 would you talk about? I want everyone to start typing fast. Objectivity, I'm not sure. Confidentiality, definitely, yeah. Yes. And competence. Excellent. The two you had to, I would say, are most relevant here are confidentiality and competence. Excellent. Well done, Ope. Well done, Asa. Okay. Well done, Nkani. Excellent. That's what I want to see from you guys. Okay. Good. Yeah. So I'd say that, you know, it's not difficult, guys. What do you mean by professional due diligence? No, no, no. Professional due diligence. This is not about new clients. Okay. So if he gives you a new client, then you have to talk about, here he's talking about using information from one client for another. Okay. So what you need is 5 sentences, guys. Okay. So what the examiner did was talked about experience there. He said, we've also been advised on trading. So you can use general experience and expertise, but we cannot use any confidential information. Yes. Yeah, that's perfectly fine. Yeah, that's perfectly fine. Okay. And confidentiality, you see, you just mentioned ACCA Code of Ethics, and it applies to both ex-clients and continuing clients. How easy was that, guys? Okay. So if you did the presentation and the ethics, how many marks have you got? 9 marks, guys, 9 marks. Can you see how, what I'm trying to show you is every single one of you can pass advanced tax. Now, apart from ethics, the examiner can also examine tax evasion. Now, if you find a client is guilty of tax evasion, we cannot notify HMRC about it, okay? So what we ask the client to do is to make full disclosure to HMRC. If the client refuses, we need to resign as their tax advisor and notify HMRC of our resignation without giving them the reason why. So remember, he can also examine tax evasion. The other area he can examine is new clients. So if you take on a new client, can any of you tell me who you need to contact? Who do you need to contact? The previous tax advisor. And what you do is you look and see if there are any threats to the ACCA Professional Code of Ethics. And if any threats exist, what we need to do is implement safeguards. Okay. The last area I want you to make sure you're comfortable with on ethics is GAR, General Anti-Abuse Regulations. And with General Anti-Abuse Regulations, if the client has carried out circular transactions without any commercial benefit to yield a tax advantage, what HMRC will do is they will withdraw the tax advantage and give you a fine of 100%. Okay, so I've covered ethics, guys. Let's now look back to the question. Okay, so we've done that first bit, and what we are now doing is doing the next bit, and the examiner has mentioned residency. Okay, so the examiner has mentioned residency. So in terms of residency, what the examiner told us is CRO is proposing that what they're going to do is they're going to own 30% of a new company. Okay, so they're going to own 30% of a new company. And with regard to this company here, we might just decide to own 20% instead of 30%. The company is going to be profitable initially, but then in the future, the company might make trading losses. And the company is going to be trading in an overseas country. So what the examiner will then do is he'll give you a fictitious overseas country. So here he's given you a country called Garia. And this company J is going to be trading in Garia. Okay. Now, the first thing the examiners asked us about, it's not determined whether J will be resident in the UK or in Garia. If J is, Julia, sorry, welcome to the course. I want to tell you that the exam the ACCA have actually released is actually the September exam. Is that okay? Julia, yeah. So the ACCA have released the September exam. So that's the one we're working for. Unfortunately now, as you know, the ACCA do not release both exams, okay? Just to give you an example. Yeah, well, Kevin, this is the specimen paper the ACCA have released for September and December, okay? Are all of you happy with that? Okay. So this is what the ACCA have said September and December is. Yeah. And we have to go with that. Okay. They do not release all the questions. Just to give you an example, guys, those of you that are sitting the exam in March 2021, will the March 2021 exam be released? Will any questions from it be released? No, they will not. Okay. They will not release any questions for March 21 because in June 21, we're going to have a different Finance Act. Okay. So they never released the March exam. Okay. But yeah, this is what we're saying. This is what the ACCA said the December exam is. So that's what we're going with, guys. Okay. Yeah. You're not allowed to use questions that have not been officially released by the ACCA. Are all of you comfortable with that? Yes, James, I'll answer your question later. In June, we have a new Finance Act, okay? In June, we have Finance Act 2020. Yeah, good. Good. It's not yet been determined whether Jay will be resident in the UK or in Garia. If Jay is resident in the UK, it will be considered as carrying on the business through a permanent establishment in Garia. Now, when we look at residence of a company, guys, what concept do we look at? How do we know that Jay will be resident in the UK? What do we have to look at? Kevin, if you don't mind, I'll answer your question later. Very good. Esther's saying we look at board of directors, head office, very good. And we look at what's called control and management, okay? So we're looking for control and management. Yeah, very good. So let's take a look at residence. So what I've done, guys, is I've prepared some notes for you, okay? So I prepared some notes for you. So the important thing with residence is only UK resident companies pay corporation tax. If the company is UK incorporated, that company is automatically UK resident. If the company is incorporated overseas, okay, so the exam has not told us that, but if the company is incorporated overseas, the company will be treated as UK resident if it's controlled and managed from the UK. Yes, the recording will be sent. The recording will be sent to you, guys. Okay, you'll get a cloud recording and you'll get all these notes. So remember, I'm covering a lot of stuff, okay? So we've got a lot of stuff to get through, yeah. So I'm actually covering some serious stuff today, yeah, good. So the company will be treated as UK resident if it's controlled and managed from the UK. Now, how do we tell if a company is controlled and managed from the UK? We look at two approaches. Either the board of directors meet in the UK or major decisions are made in the UK. So if we set up an overseas company and the company is controlled from the UK, will that overseas company become UK resident, guys? Yes or no? I want to see everyone responding. Yes, very good, excellent. Don't be shy, guys, don't be shy. We're all here to join in. We're gonna have some fun, okay? And all of you are gonna learn some stuff, good. So if this company is controlled and managed from the UK, that company will become UK resident. If that company is controlled and managed from the overseas country, will that company be UK resident? Yes or no? No, excellent, excellent, good. Now, if the company is controlled and managed from overseas, will we have to pay tax on its profits in the UK? Yes or no? No, if it's, yeah. So if the company is controlled and managed from the UK, then we, no. If the company is controlled and managed from the UK, then all the profits, remember it's earning profits in the overseas country, then all the profits will be taxed in the UK, okay? Now, because the profits will be taxed in the overseas country as well, can any of you tell me what we can claim? Double tax relief, excellent. Can we claim double tax relief if there's no double tax treaty? Can we claim double tax relief if there's no double tax treaty? Yes or no? Yes, very good. We get unilateral relief. Excellent, guys. I'm very pleased to see the responses coming through. Okay, so I'm very pleased to see the responses coming through. Yes, we can get DTR if even if there's no double tax treaty. Now, if the company is controlled and managed from the overseas country, okay, will the profits be taxed in the UK? Yes or no? No, no, very good. Will the dividends be taxed in the UK? Yes or no? No. So because the profits and the dividends will not be taxed in the UK, if the company is resident overseas, are we going to claim double tax relief? No. Excellent. Well done, guys. Yeah, good. Okay. So I just want to show you what your examiner said then. Okay. So what he was looking for you to do is to talk about the residency here. Okay, so you can see you have to get good at writing these short sentences. So what we would say here is the profits of the business will depend on the residency, and if and they will be taxed obviously in the overseas country at 13%. But if the company is UK resident, then the profits are going to be taxed in the UK as well. And what we're going to do is we're going to claim double tax relief. And because there's no double tax treaty, we're going to get double tax relief under the unilateral basis, Okay. Now, if the company is resident in the overseas country, can all of you see your examiner using these small headings? Can all of you see that? Yeah. So use these subheadings to break up your answer, and notice that you're writing short sentences. If the company is resident overseas, then you're only going to be taxed in the overseas country, and there's going to be no UK corporation tax on the profits, and the dividends are not going to be subject to tax as well. Okay. So how did you find that, guys? Easy or difficult? Easy or difficult? Okay, it wasn't too bad. That's what I'm trying to show you. Yeah, chilled. Yeah, good. I want to see everyone commenting. Okay, I want to see everyone commenting. Needs practice. Yeah, this is what I'm trying to show you. What I want you all to do today is leave here thinking that you can pass the exam, guys. Okay, so I want you to leave here thinking that you can pass the exam. Sorry. So, yeah, of course you can. Well done, Sheila. Good. Excellent, excellent. So moving on now. So we've dealt with some aspects of residency. The other thing I want you, the examiner wanted us to think about here, I am going to talk about the losses, but I just want to deal with the next bit first here. Now, guys, if we set up a branch in the overseas country, would the branch profits be taxed in the UK as well? Yes, very good, yes. So if you set up a branch, you don't look at the residency. The profits will be taxed in the UK. Yeah, it's an extension of the UK company stat. Excellent. With a branch, would we be able to claim double tax relief? Yes. Yes, Hilda, excellent. You can claim double tax relief. And if we do not want the branch profits to be taxed in the UK, what do we need to make? An election. Very good, yes. So we can make an election, okay? So what I want to do now is I want to explain the differences between setting up a branch versus setting up a subsidiary. Okay, so this is a very important concept to understand. Do any of you know what way this image is from? Do any of you know where that image is from? Rio, James, absolutely. Has anyone here, apart from me, been to Rio? Has anyone here, apart from me, been to Rio? So Rio is called the Samba City, okay? So you go to Rio and you start, yeah. So, but these are the nice things you guys can do once you've passed your ACCA exams. It's fabulous, Kevin. Absolutely fabulous, okay? It's amazing, amazing. Yeah. So these are the nice things. Yeah. Well done, Carla. So yeah, this is what I'm trying to show you. Don't think, guys, we're struggling and we're not. You guys are going to have so much fun. Once you start earning more money, you can travel, you can do lots of things. Okay. So that's what I'm trying to show you. It's a great thing. It's a good thing. Yeah. So don't think, you know, we don't do exciting things. We do. Okay. So yeah, after COVID, we're all going to be traveling, guys. Good. So if you set up a branch in the overseas country, what will happen here is the UK company can make an irrevocable branch election. Okay, so you can't change your mind. And what the election does is the election makes all your overseas branches exempt from UK tax. Okay, so the election covers all the overseas branches. Don't forget the company here has got other overseas branches. So the idea here is if we are anticipating branch profits, what we do is we make the branch election, okay? But if we're anticipating branch trading losses, we do not make the branch election, because what we want to do is take those overseas branch losses and offset them against the UK profits. Now, what the examiner told you here is that in the future, the operation in this overseas country is going to make losses. So if we want to use up those losses in the UK, what do we need to set up, guys, if we want to use up those losses in the UK? A branch, very good. Yeah. Well, don't forget. Yeah. So Hilda, so if you set up a branch, then we'll be able to offset the branch losses against the UK tax. Okay. Now the good news, guys, is I can unmute you. Okay, I can unmute you. So if you do question mark, let me see if I can unmute Hilda. I don't know whether her laptop has got a mic in.
Hi.
Hi, Hilda. Hilda, what is your question?
Is it group relief for branches?
No, it's not group relief for branches, Hilda.
Okay.
So the branch is an extension of the UK company, right?
Mm-hmm.
So if the branch makes profits, they're automatically added to the UK company's profits.
Okay.
But Hilda, if the branch makes losses, we can offset them against the UK profits.
Okay.
Okay. So remember, Hilda, a branch is not group relief.
Okay. Thank you.
Great. Excellent. Good. So remember, guys, you know, I can always unmute you if you want to have a chat. Okay. There we are. Good. Let's now look and see what happens if we set up a subsidiary. Now, if you set up a subsidiary, can we take the overseas subsidiary losses and offset them against the UK profits, guys? Yes or no? No, we can't. Okay, we can't. The overseas sub is not entitled to any UK capital allowances or loss relief. But don't forget, the overseas sub will be treated as a related company for quarterly installments. Okay, so when we divide the threshold of 1.5 million by the number of companies, we will include the overseas sub as well. So one of the things we can consider doing is starting with a branch, okay, if we're going to make losses quickly. So we consider starting with a branch to claim UK capital allowances and loss relief. So here, if we start with a branch, in the first year, would the profits be subject to UK tax? Yes, of course, yeah. But then in the next year, once we start making losses, we can take those branch losses and offset them against the UK profits. In future, James, I'm teaching you stuff, right? I've shown you the answers in the question. James, I'm teaching you detailed stuff, okay? In future, you can then incorporate the branch into an overseas subsidiary to shelter the profits from UK tax. So one thing I want all of you to appreciate is you can move from a branch to a subsidiary, but you can never move from a subsidiary to a branch. Did all of you understand that? Yeah, good. So remember, guys, James, don't worry, don't panic. I'm teaching you lots of stuff because obviously your exam in March will not be identical to this, yeah? A question here, can you carry back branch losses, okay? Okay, so let me just deal with the first question there. The way to think about that is the branch losses will be amalgamated with the UK company's profits, okay? So they're amalgamated. If you like, the branch does not have a separate identity. Stas, did you get that? Are you okay with that? Yeah? Okay, yeah. Another question from Carla, to start with a branch to gain loss relief and then change to a sub. Absolutely correct, Carla. Spot on, okay? So we can move from a branch to a sub, yeah. Well done, Carla. Once you make the branch election, it's irrevocable. Yeah, absolutely, Ope. Once you make the branch election, you can't you can't change your mind in the future. Okay, good. So some very good questions coming up. Remember, guys, if any of you want to speak, okay, no, the branch doesn't have to have the same accounting period, but Herman, for the purpose of your exam, the examiner will make the accounting period the same. Okay. Does the election remain irrevocable? Yes, absolutely, James. Yeah. So once you make the election, even if the ownership of the company was to change, you can't change that. Okay. You'd have to incorporate a new company, James. Good, guys. Okay. So remember, I'm doing quite detailed stuff with you. Yeah. Olu, okay. There we are. Hi, Olu. Olu, do you have a mic?
Oh, sorry, I didn't unmute myself.
Hi.
Sorry, hi.
Hi.
So, with branches, all the profits of all the branches in the UK are brought together and treated as one. So they net off each other. That's how it works, right?
Yeah. No, what we're saying, Olu, is even if you have a branch in an overseas country,
Okay.
right? So even if you have a branch in an overseas country, what happens then is, I'll just make it a bit louder because I don't think they can hear you. Okay.
Sorry.
Okay. So I think, yeah, hopefully all of you can hear Olu now. Even if you have a branch in an overseas country, those overseas branch profits and losses will be added to the UK company.
Oh, I see.
Yeah, that's the interesting point he was trying to make
Okay.
here. So it doesn't matter where the overseas branch is. It's part of the same UK company.
Oh, okay. I didn't know that. Thank you.
Yeah. Okay, great. Okay, I've got thanks, Olu. So guys, I do want you to join in. Okay. So remember, we do learn from each other. So if you got any questions, yes, Carla, we will have, sorry, I'm just trying to unmute Olu. If you just give me a second. Yeah, great. Okay. Okay, moving on. Carla said, yes, there will be overseas tax on the branch, but what we then do is claim double tax relief, okay, based on the law of UK and overseas tax. And then Chiela said, if the branch is an extension, you see what I'm saying is the branch doesn't have a separate identity. So it's amalgamated with the UK company, and then you look and see what the net figure is. Here, the examiner did not give you the UK company's profits. You see that? Okay. So in order for me to answer your question, what I'm trying to show you guys is each branch doesn't have a separate identity, okay? So it's all added to the UK companies. Yes, so if the UK company has got losses, you just net them off, okay, Chiela? So if the UK company has got losses, you just net them off. Great stuff, okay. No, Herman, no, you can't choose because the branch doesn't have a separate identity. Yeah, it's just part of the same UK company. Good. Okay. So some very good questions coming through, guys. Let's just crack on. Yes. So all we needed to do then. So yeah. So in terms of the losses, guys, by the way, guys, in order to give group relief, what percentage do you need? 75%. Here, if you own 30%, the examiner, yeah, 75%, correct, yeah. So to give group relief, we need 75%. Here, the examiner was talking about 30%. So here, we don't talk about group relief, very good. We talk about a consortium relief. With consortium relief, each company should own at least what percentage, guys? 5%, excellent. And together, they must own 75%. Now, can an overseas company be part of a consortium? Yes, very good. Yeah, well done, Rhea. Well done, Inkani, Ope. Sorry. At times, guys, I may not pronounce all your names correctly. Okay, particularly if it's a name I'm not familiar with, but I'll do my best. Thanks, Rhea. Okay, excellent. So here we didn't talk about group relief. We then had to talk about consortium relief. Okay, so the company would be a consortium company because we own at least 5%, and together we own at least 75%. Now, if we only own 20% of the company, this means that the other company, Carol, yeah, I will answer. Yes, absolutely. With consortium relief, it only relates to UK companies, okay? So I'll just deal with the point that the examiner is trying to make. If we own 20%, the other company will have 80%. Because the other company has 75% or more, would we now have a consortium? Yes or no? No, excellent. So what I want you to tell me, listen to this question very carefully. If you understood this, you could actually get this question correct. Is it better to own 20% of the overseas company or 30%? I want everyone to type in an answer, 20 or 30. Excellent. Herman, you got that wrong. Yeah, it should be 20, it should be 30%. If you own 20%, Herman, because the other company has 80%, the other company would take all the loss. Did all of you get that? Yeah? So that's what your examiner was trying to get at here. So are the questions quite tricky, guys? Are the questions quite tricky? Yeah, okay. So you have to think about it carefully, guys, okay? You have to think about it carefully. So let's review consortium relief. So guys, these notes that I'm doing, are you finding them useful? Are you finding these notes useful? Yes, yes. So actually what I'm in the process of doing is I'm writing a book, yeah? So I'm writing a book and that'll have all these notes in it, okay? Now for you guys, obviously all of you who are here, you know, you'll have passed the exam, okay? You'll have passed the exam. But anyone who's doing the exam for June, you know, they'll have access to this book, but obviously you'll need to buy it, okay? If you want the book, but he'll have all these special notes that I do, yeah. So let's take a look at consortium relief. So consortium consists of any number of UK resident companies, each of whom own 5% and in total own at least 75%. So what we're trying to say here is if we own 30% in the company and the other company owns 70%, now we'd have a consortium. Okay, can you see how tricky this was? But if we only own 20, because the other company owns 80%, they would take all the loss. Yeah, this is very good for CPD, Amapol. Yeah, so yeah, any of you guys that have qualified already, you know, this is very good. You can write this down under your ACCA CPD that you attended this session, and this is what you learned, okay? So you learned the important thing in terms of structuring your shareholdings. Now, don't forget, OSC stands for ordinary share capital, Kevin, okay? So OSC stands for ordinary share capital. Don't forget the interesting thing here is the owners can be overseas companies. So that's what the examiner was trying to get at, okay? So for consortium relief, the owners can be overseas. But if they're overseas, they cannot take or give a loss. The company would have to be UK resident in order to take or give a loss. So we've got two types of consortium relief. The first thing we've got is consortium relief upwards, okay? So we're giving consortium relief upwards to the holding company. So the owned company can give losses pro rata to the owner's shareholdings, but must first claim any potential current year relief. So before we give out losses to the owners, we must use up the loss ourselves in the current year. The other thing the examiner could do is examine consortium relief downwards. So here the owners are giving consortium relief downwards to the owned company, and the owners are allowed to give consortium relief downwards to the owned company, but it's restricted to the owner's share of profits. Okay, so here let's say we buy 30%. So if we buy 30% of the company, then we would have a consortium. And what we're allowed to do is we're allowed to give losses to the company, but we can only give consortium relief of 30% of the profits. Now, have all of you understood consortium relief upwards and downwards? Yes or no? Yes. So I'm sorry, guys, you know, we're doing quite a lot of stuff. Okay. So this is, I've made this session very technical. Yeah. Okay. So you didn't know they existed. Absolutely. So you can see all of you are learning stuff. Okay. So I've made this session very technical. It's content heavy. Okay. So we're doing a lot of stuff here. Okay. The last thing is controlled foreign companies. Now, the examiner did not examine controlled foreign companies in detail here. Okay, but he just wanted to see that you understood controlled foreign companies. With regard to controlled foreign companies, okay, what happens is the UK company has what's called a controlled foreign company tax charge. And the controlled foreign company tax charge is based on the UK company's share of the CFC profits, and it'll be taxed at 19%. Okay, so that's all the examiner wanted. He just wanted you to explain the purpose of the CFC rules and the charge that can be levied against them. Now, so what that means is that if the company was a CFC, 30% of the profits would be taxed in the UK at 19%. And would we be able to claim double tax relief for the overseas tax paid? Yes, absolutely. Yeah. So you just had to explain that quickly to the examiner. Okay. So I just want to show you your examiner's answer. No. James, sorry. So James, can I just very quickly, James, can I unmute you, James?
Can you hear me?
Hi, James. Hi. Okay, so James, remember, with a branch does not have separate identity.
Okay, so this would be a subsidiary that would be considered CFC.
Absolutely.
Okay.
Once you have a branch, it's automatically amalgamated with a UK company. So I want to tell you, James, now the three conditions for having a CFC. We must have an overseas resident company. The UK company must own at least 25% ordinary share capital itself, but in total 51% is owned by UK resident companies. And the last condition is the CFC set up to divert profits away from the UK. Is that okay, James?
Yeah, that's great. Thank you.
Yeah, great. Yeah, thanks, James. I love it when you guys ask me questions, guys, okay? So that shows me you're understanding things, and you'll be surprised that what I always felt is that Herman, each company itself must own 25%, you see? But in total, you must own 51%. Is that okay, Herman? Yeah, good, okay. So I'll just cover the CFC stuff. Okay, guys, so don't forget if you speak on the course, don't forget to mute your microphone later, okay? Okay, great. Sorry, yeah, I'll just check and see it's not muted. Okay, good. Yeah, so once again, with CFCs, I talked to you about the branch election. With CFCs, the examiner just wanted you to come up with a very simple point here where the rules apply. So it applies to UK companies that own at least 25% of a CFC. And what would happen is we'd have a CFC tax charge based on our share of the CFC profits, tax the UK at 19%, but then we're allowed to claim double tax relief. Do all of you feel a bit comfortable with CFCs? Yeah, okay, good. So this wasn't, he didn't examine CFCs in too much detail in this exam. Good. And then we had the purchase of an investment property, okay? So purchase of investment property. So let's just take a look at the investment property now. So here your examiner was examining VAT. So we're going to buy a new unused investment property, okay? And what will happen is we're going to grant a 20-year lease of this building to a retailer. Now, with an investment property, with a new commercial investment property, this is referred to as an exempt supply, okay? So this is an exempt supply. Now, if it's an exempt supply, guys, so if we do nothing, it's an exempt supply, do we need to charge VAT on the tenant rents? No, okay? So if it's an exempt supply, that means the rents will be exempt from VAT. We're not going to charge VAT. There's no VAT payable by the tenant. If it's an exempt supply, can we claim back input VAT on the building expenses? Yes or no? No. Excellent. Well done, guys. Good. If we make an option to tax the building will now be treated as a taxable supply for 20 years. Now, will we have to charge VAT on the rents to the retailer? Yes. Can any of you tell me which retailers will be angry with us? Which retailers will want to fight with us? Excellent. Well done, Naran. Yeah, well done, Cheza, Emma. Yeah, good. So if the tenant is not VAT registered, well done, Carol, they're going to be very upset with us, okay? But the benefit now is, will we be able to claim back input VAT on all the building expenses? Yes, good. Now the question is, right, if we make option to tax, can we claim back the VAT we paid? Yes, on the purchase of the building. Good. So that's what your examiner wanted you to say, okay? So here he was just talking about option to tax. Excellent, well done, but do not add VAT when we sell it. Absolutely, yeah, okay? So here you just talk about the fact that if no option to tax is made, it's an exempt supply, okay? But if you make an option to tax, you have to charge VAT to the tenants, and the tenant will be angry with us if they cannot claim back the input VAT. And the option to tax lasts for 20 years. And obviously when we sell the building, we do have to charge VAT. How's everyone feeling? Are all of you guys okay? Yeah, good, yeah. So remember, guys, it's quite there's quite a lot of stuff yeah, as long as the tenant is VAT registered, then we're fine. Hilda, which one is 10 years? Sorry, Hilda, what are you saying 10 years? Oh, Hilda, 10 years is the capital goods scheme, yeah? Hilda, the capital goods scheme is for 10 years, but that relates to partially exempt businesses. Good. Remember, guys, after 1 hour, yes, Said, yeah, Said, I will tell you what kind of stuff after I finish the question, I'll then talk to you about the kind of stuff which can come up, okay? So remember, guys, after we've done 1 hour, we are going to have a quick break, okay? So after we've done 1 hour, we are going to have a quick break just for you to digest the stuff. Okay, good, guys. So keep on cracking on. So we have to get through this question first. We've then got a gift of shares to a trust. And what we're told here is I established a discretionary trust for the benefit of my nieces and nephew. Excellent. Well done, James. So with a gift to discretionary trust, we call that a CLT. Okay, we call that the CLT. And what he told you here is if it's a CLT, he's going to pay the IHT due. Okay, so he's going to pay the IHT due. Very good. So if the donor pays the tax, you guys are so fast. Okay, well done, Chiela. If the donor pays the tax, do we use a rate of tax of 20% or 25%? What do you think? 25%. Excellent. Okay. Now, what the examiner told you here is that with regard to these shares here, he owned before the gift. So before the gift, he owned 80% of the company. Okay. After the gift, he'll own 60% of the company. So and he's giving away 20,000 shares. Excellent. Well done, James. So what James said is when we compute the value of the gift, we have to look and see how much the donor has lost as a result of making the gift. When do we look at the market value of the gift based on the amount the donee has received? When do we look at that? For which tax? CGT, excellent, well done, brilliant stuff, guys, excellent, very good answers coming through. So for CGT purposes, you look at the market value of the gift. For IHT purposes, you look at the gift based on the loss in value to the donor. So here, we had to look at the loss in value to the donor. We had to work out the transfer value. And then basically we knock off the annual exemptions available. And then don't forget, we had a 325,000 nil rate band. You look and see how much of the nil rate band was used, and then you allocate it. And the important thing here is to use a rate of tax of 25%. Okay. So as I said here, based on 80% shareholding, the shares were worth 1.92 million. After the gift, he only owned 60% of the shares. So the shares were worth 1,020,000. Okay. So what I want to do now is cover lifetime gifts with you. So there are two types of lifetime gifts. The IHT payable on a transfer to a trust, Carla, it's based on when in the tax year the gift takes place, okay? So if the gift takes place in the first half of the tax year, April to September, it's payable on the 30th of April following the tax year. If the gift takes place in the second half of the tax year, it's payable 6 months after the end of month of gift. Is that okay, Carla? So the first type of gift we have is called a potentially exempt transfer. James, if you don't mind, let me just finish this and then I'll answer James's question, okay? Yeah, good. No, not to worry. I want you guys to ask me your questions, but just remember, what I want to do is build you up, okay? So I'm just doing the basics first, and then I have to build up a bit. So with your questions, I can build up on, yeah. But let's just get the basics sorted out. So the first type of gift the examiner is going to give you is a gift to an individual. With gifts to individuals, we call them pets. Now with pets, is there any tax payable while the donor is alive? Yes or no? So for yes, just type in Y, and just type in no. No, so I wanted to see no there, very good. So no tax is payable when the donor is alive, okay? Now, if the donor dies within 7 years of the gift, can any of you tell me what rate of tax is payable? 40%, excellent. And as Bushra said, we can then deduct taper relief, excellent. So we tax at 40% if the donor dies within 7 years of the gift, and we reduce the tax on death by taper relief if the gap between the gift and the date of death is at least 3 years, okay? So as long as we have a gap of 3 years, we can now start getting taper relief. The other gift that the examiner gave you here is a chargeable lifetime transfer. And a chargeable lifetime transfer is a gift to a trust. With regard to a gift to a trust, when the donor is alive, we tax this immediately, guys, at 20%. Okay, so even though the donor is still alive, there is IHT payable. But if the donor pays the tax, the gift is net of 20% tax. So in other words, the gift is 80%. So we say 20 over 80, and we use 25%. So in this question here, you had to use 25% because the donor was paying the tax. Now, if the donor then dies within 7 years of the CLT, we now tax the gift at 40%. So if the donor dies within 7 years of the gift, we now tax the gift at 40%. Can any of you tell me what 2 things you can deduct from the tax payable on death? Don't talk to me about the nil rate ban, guys. Don't talk to me about the nil rate ban. Don't talk to me about quick succession relief. Come on, guys. Taper relief, excellent. So the first thing is taper relief. Now, have we paid some tax? Have we already paid some tax? Yeah, very good. Excellent, good. So the 2 things you deduct, very good, is you reduce the tax on death by taper relief and lifetime tax previously paid. Do all of you now feel you've understood pets and CLTs? Do all of you feel you've understood that? Yeah. So that's very important to understand, guys. Very important. Because in the exam, he'll either give you a lifetime gift or he'll ask you to work out the tax on death. Okay. So it's very important to understand. Now I'm going to ask you a tricky question, guys. Okay. So I'm going to ask you a tricky question. Now, these were unquoted shares. These were unquoted shares. Okay. These were unquoted shares. What percentage business property relief do we normally claim on unquoted shares? 100%. Excellent. Yeah. So Bushra, be careful. It's 100% BPR. 100% BPR on unquoted shares. Very good. James, just to tell you this, by the way, James, you may not know this, the examiner doesn't really talk about plant and machinery. Okay. So he basically will give you either unquoted shares or quoted shares. Okay, guys. Okay, very good, very good. So I'm very, very happy with you guys. You're doing extremely well. And, you know, we've looked at a massive, big 35-mark question. Okay, so we've looked at a massive, big 35-mark question. Do all of you feel, after spending 1 hour with me, do all of you feel that you know more? Does anyone feel here that they know more than when they started? Yes. So that's the point I'm trying to make, guys. Okay. So you can see how learning can be accelerated. Okay. So what I'm trying to do, I'm trying to show you the tricks to pass the exam. The tricks are focus on the easy marks in the question. Understand, take time to understand the question. Okay. Make sure you learn the key technical knowledge. So people get overwhelmed with tax, okay? But remember, what I'm trying to show you here is if you know the key points, you will pass the exam, guys, okay? So if you know the key points, you will pass the exam. And don't worry about learning everything. Just learn the key points and make sure you show the examiner that you know this. Yes, my book is going to be released for FA, is going to be released for June, okay? But like I said, any of you that are sitting the exam in March, you'll have already passed the exam before my book is released. But yeah, for people who are sitting in June, you will have, yeah, but people who are sitting in June, but you know, maybe, yeah, CFCs are key technical knowledge, yeah? Yes, James, yeah, you can see, James, just to tell you about this, I have to tell you about this. The best book is the Kaplan book, okay? The best book is the Kaplan book. It's amazing. But what I'm trying to do is I'm trying to summarize this big book here. It's 1,200 pages into a short thing because people find that too much, okay? But our Kaplan book, James, is just the best, okay? Okay, guys. By doing that, I've shown, yeah, but it's too much, Carol. Yeah, it can be overwhelming. It can be overwhelming. Good. But I'm very pleased with all of you. I think the study text, yeah. Oh, even the study text, Carol says, is big. Okay, good. Okay, guys. Okay, good, good, good. I'm very happy with the progress we're making. Do all of you feel ready for a break? Do all of you feel ready for a break? Yes, yes, good. Okay. So why don't we have, I'm just giving you a very short break, guys, because we're trying to cover as much as we can. Okay. So do you mind if I just give you about 7 minutes? Is 7 minutes enough, guys? Just for you to grab a drink, grab some water, maybe just grab a quick bite to eat, and I'll see you back here in 7 minutes. Okay. If any of you have any questions for me, you can continue to ask me questions, okay? But what I'll do is I'll turn off the video for now. Okay, so first question, Said.
Hello, Neil.
Hi, Said. How are you doing, my friend?
I'm fine. I got 43.
Oh, no, Said. Oh, I'm very sorry to hear that.
No, because I missed 15 mark, Neil. I didn't have time to finish 15 mark.
What do you think is slowing you down? Do you think it's the doing the online exam?
Yeah, but because I'm having mask and everything, one point I couldn't able to breathe properly because I have other health conditions, and they're very strict to have the mask on.
They're very silly, you know. They should be more sympathetic to people like you. You know,
No, I
keeping a
know.
mask on, it really does inhibit your breathing.
Yeah, because I can't, because my glasses, I have to take it out again and again. Because if you put the mask, my glasses, it's not comfortable.
Exactly.
Yeah.
But hopefully this time, because it's remote invigilated, at least you don't have to wear the mask.
Yeah, hopefully.
But
I'm coming to your...
Can I just say, you know more than enough to pass the exam. You just have to be relaxed and go for it.
Okay. I'm coming to your class on 4th and 5th of Feb.
You're coming for the revision.
Yeah.
Excellent. But what I want to do,
I'm started studying already.
Okay. And then if you didn't come for the earlier session I did on the 3rd of January.
I did. I did.
Oh, you did come for that. Okay, fine. Okay. But any of you that didn't come for it, remember, you're welcome to the notes. Okay, all the best, Said. Looking forward to seeing you soon. Take care.
Thank you.
Okay. Inkani said, yes, Inkani, I am going to make these mind maps available to you. Yeah, so I'm going to send you guys notes after this. I'm going to send you notes after this. Do you also do tutoring for APM? Guys, look. Yeah, guys, look. Yeah, I'm a tax specialist. Okay, I'm a tax specialist. I'm actually the tax specialist. Yeah. Before, yes, Kevin, I'll be doing a revision course at Kaplan. So I'm a Kaplan tutor. If you want to just, if you drop me a message on LinkedIn, okay, or just email me, I'll get back to you. In fact, I might have to just, sorry, just move this here. I'll just put in my email address here if any of you need to contact me at all. Someone asked me, do I teach CTA? Yes, I do teach CTA, but CTA is very specialized, guys. I teach the IHT and trust module, and I teach the taxation of major corporates model, okay? So I specialize in corporation tax there and IHT, okay? So those are the modules I teach here. Absolutely, yeah, Carla. Carla, yeah, if you just drop me if you just drop me an email. The only thing is for March, I'm not doing that many revision courses. My revision course runs during the week on weekdays, okay? I'm not doing a 2-day revision course for March. That's just the way they've scheduled it, okay? But, you know, I'm helping you guys today. Good. Not to worry, Badresh, if you didn't get with the 3rd of January. If any of you want any of the material from 3rd of January, just drop me an email or connect with me on LinkedIn. Okay, good. Oh, I see, Bushra. Yeah. You know, Bushra, just chase it up, because I think there might be some more availability released. Yeah. Okay, guys. Yeah, the exams are remote in March. Stas, by the way, Stas, I hope I'm pronouncing your name correctly. I have done a session. I did a session on the 3rd of January to help people with the CBE. Okay. So, you know, if you want access to that, just drop me an email. Yeah. The remote exams, this is why I'm saying I recommend you guys have an external monitor. Okay. So I'm lecturing to you on a laptop, but I've got a big monitor here. I got a massive big monitor, and it's so nice to put the stuff on. Okay. So when you have a big monitor, it does make a big difference. But the only thing you need is a webcam to go on the monitor. That's it. Okay. So I'd recommend you have an external monitor. Good. So you can only have one screen, but there's no restriction on how big the screen is. Stas, are you happy with that? So all they're trying to say that you can run your laptop through another screen if you have to. Or you've got a desktop, that's great, or you can have another screen attached. You can't have two screens. They don't allow you to have two screens. You can't use your own scrap paper, Olu. You must use the online scratchpad. Okay? Because you're going to be remote invigilated. Yeah. Okay, guys, so let's crack on. Time is running. Tax tables, James, you'll have a little window and you open it up. Okay. But what I would recommend you do is learn the main things. I have to be honest with you, in advanced tax, you don't really need to look at the tax tables that much. Okay. You know, all of you should know what the personal allowance is, basic rate band. I would say only for national insurance. The only time you're looking at the tax tables is probably national insurance and stamp duty. But for most of the major taxes, you don't really need the tax tables. Okay, guys, let's crack on because we've got a lot of stuff to do. If you look at question 2 now, question 2. So with question 2 here, this is a 25-mark question. With question 2, there are no presentation marks. Okay, so here you just get cracking doing question 2. So with question 2, what the examiner told us, Freya was domiciled and resident in the UK for more than 30 years. So she's UK resident and domiciled, and she's got an unincorporated business. Now, what does the examiner mean by unincorporated business? Does he mean sole trader or company, guys? Sole trader or company? Sole trader, absolutely spot on. Great stuff, guys. Now, Freya has received an offer of 2.3 million for her sole trader business, okay? So Freya is planning on selling her sole trader business. If she accepts the offer, her only chargeable assets for capital gains tax purposes will be goodwill and her business premises, okay? So the only two assets that are going to give her gains are goodwill and the business premises, and this will be £850,000. Okay. Now, if Freya sells the business, can any of you guys tell me which relief she can claim? James has asked me a question. Do you recommend focusing on? Yes, James, I always recommend you do the 35-mark question first. Very good. No, Chiela, be careful. If she sells the business, she can claim entrepreneur's relief. Now, if she claims entrepreneur's relief, the gain will be taxed at what rate, guys? The gain will be taxed at what rate? 10%. Excellent. Well done, Bryony. Herman said, excellent. I'm very pleased with you guys. You guys are doing so well, okay? So don't forget, guys, we're only in January, okay? So there's still a lot of time to the exam. you guys continue working the way you're doing now. Make sure you're all going to pass the exam. Okay, you're all going to pass the exam. Okay. Freya intends to live in the country of Benida and asked us to consider whether she could save tax if she was to delay the sale of the business until she's left the UK. Now, she wants to live in Benida for no more than 3 years, okay? She'll buy a home there and will retain her house in the UK. Now, the first thing the examiner wanted us to do is to tell him what would happen if she sells her assets. If she sells the assets, what we had to tell him is entrepreneurs relief would be available and Freya's gain will be taxed at 10%, which is what all of you said. So don't forget, guys, is you work out the CGT on the capital gain, obviously. Now, if Freya sells the business to a company for 2.3 million, the examiners confirmed that all the conditions necessary for incorporation relief would apply. Okay. Now, yeah, very good. Yes. Yeah. So excellent. Yeah. So what I want to do when I do this question is I want to cover a bit on incorporation relief with you. Okay. So with regard to incorporation relief, what you're doing is you're transferring your business to a limited company in exchange for shares. So you're transferring your business to a limited company in exchange for shares. Now, it is possible to make an election to disapply incorporation relief to crystallize a gain in order to claim entrepreneurs relief as well. So you can see here, Freya would be entitled to entrepreneurs relief. So it's possible for her to make an election to disapply incorporation relief. The other point I want you to pick up is that if you transfer your assets to a company, you cannot claim entrepreneurs relief if the company is a closed company. And a closed company is one that's controlled by 5 or less shareholders, and if the sole trader continues to own at least 5%, absolutely stays here. Okay, so remember here, if you transfer goodwill to a closed company, then there's no entrepreneurs relief available on the goodwill. So the gain on the goodwill would not be taxed at 10%. With regard to the shares in the company, okay, if Freya yes, it's a goodwill only. James, sorry, I don't know what you mean by ST, by 5%. You mean shareholder? Do you mean share? Oh, sole trader. Okay. So what? Oh, yes, absolutely. So consequently, could we buy 5% at a later date? Absolutely, yes. Yeah. Yeah, absolutely, yes. So if we buy 5%, we don't have this problem. Yeah. Now, the gain on the shares will be eligible for e-relief as long as you're employed by the company. Okay, as long as you're employed by the company. Is Freya here going to be employed by the company, guys? No, she's not. So one thing you have to bear in mind is if she's not employed by the company, when she sells the shares in the future, the shares will not be eligible for e-relief. Okay, so that's what I'm trying to show you. Now, in order to claim e-relief, how long do you have to have owned the shares for? 2 years, absolutely correct. In coming up with the 2-year period, what I'm trying to show you is you can include the pre-transfer ownership period. You see that? Okay. You don't just look and see how long the shares have been owned for. You can consider how long Freya owned the sole trader business for. Do you see what I mean? So she doesn't, if she was employed by the company, she wouldn't have to keep the shares for 2 years because we can consider the pre-transfer ownership period. Was this quite tricky, guys? Yeah? Yeah, good. Okay. Now, the other point I want you to pick up is that at times what the examiner will tell you is that the sole trader wants to keep part of the assets. Okay? Like here, Freya had goodwill and a building. So the examiner could tell you maybe she wants to keep the building for herself. If that's the case, would we be able to postpone our gain under Incorporation Relief? No, we can't, okay? So if you keep, in order to claim Incorporation Relief, you have to transfer all the assets over to the company. So if the sole trader wants to keep some of the business assets, what we do is we claim gift relief to roll over the gains on incorporation against the base cost of the individual assets transferred. Okay, so if you want to keep part of the assets when you're transferring them over to a limited company, Incorporation Relief will not apply. But what you are allowed to do with the assets you're transferring over to the company, you can postpone the gain under gift relief. Did all of you understand that? So I'm covering some detailed points here, okay? So this is quite technical. Okay, good. Now, the next point I want to pick up. Freya yes, but you have to use the word gift relief. Stas. Yeah, okay. So I don't want you to talk about rollover relief here. So how many reliefs do we have for our exam, guys? 10, very good, yeah? So those of you who are my students, Ria and Carol, you know we've got 10 reliefs. So we don't want to overwhelm ourselves with the 10. For the time being, I'm talking about e-relief and incorporation relief. And I also brought in gift relief. So I talked about 3, but I don't talk about rollover now. We'll talk about that later. Now, Freya is leaving the UK and going abroad. If she wants to avoid paying tax on the gains, on her UK gains, do any of you know how long she must stay abroad? 5 years. 5 years, absolutely correct. Thank you. Yeah, all I wanted you to say is 5 years. So if she comes back to the UK after 3 years, will she have to pay tax on the gains? Yes, absolutely. Okay, so I do want to cover this with you. Okay, so one of the things we do need to know in terms of Freya is that if she goes abroad for 3 years, then her gains will be taxed in the year she comes back. So we would advise her to stay abroad for at least 5 years. Yes, yeah. So Chiela, we call her a temporary non-resident. Absolutely correct, Chiela. So she's called a temporary non-resident because she's been UK resident for at least 4 out of the last 7 years. So if you go abroad, what happens is you can escape paying CGT on the gains on the assets you owned before you went abroad, as long as you stay abroad for 5 complete years and you sell the assets during the 5 years. The issue here with Freya is she's coming back after 3 years. The problem is because 3 years is less than 5, in the 3rd year, when she comes back, HMRC will tax her on the gains, okay? So we have to recommend that she stays abroad for 5 years. Now, Freya will stay in her UK home for 55 days in each year, of which 25 will be working days, and she'll spend the rest of the time in Benida, okay? Now, do any of you know what the mnemonic is for the 5 ties to the UK? What's the mnemonic? Said, Fedak, very good. Said, Cheza, Herman, Esther, very good. I'm happy to see everyone has talked about FEDAC. Okay, so those of you who don't know this mnemonic, I would like you to learn it. Okay, so let me cover FEDAC with you. F stands for family, and that's where you have a spouse or kids under the age of 18 in the UK. E stands for employed. If you worked in the UK for at least 40 days. When you work in the UK, you can either work in self-employment or employment, okay? But you must work in the UK for at least 40 days. D stands for days. We look and see whether you spent at least 90 days in the UK in any of the 2 previous tax years, okay? So if you spent at least 90 days in the UK in any of the 2 previous years, then you're treated as having a day's tie to the UK. A stands for accommodation. We look and see whether you owned your home and it's available to you for at least 91 consecutive days, okay? So with accommodation, you use the home in the UK and it's available to you for at least 91 consecutive days. You then have an accommodation tie. And lastly, we look at the country tie. And the country tie applies if you spend more time in the UK compared with the overseas country. The country tie only applies to leavers like Freya. If you have an arriver, you only do FEDA, F-E-D-A. Do all of you feel you've learned the 5 ties? Yes, yes, good. I'm sorry, guys, I have to press on, okay? So we're doing stuff quite quickly because I want to cover as much as I can with you, okay? So here you can see the examiner did want you to talk about the 5 ties, okay? So here the examiner did want you to talk about the 5 ties. Here, so, you know, family, FEDAC, yeah. So this was all about FEDAC, okay? So you have to explain the 5 ties to the examiner, and based on that, you then had to tell him whether or not she was resident or non-resident. So obviously with her, she's going to be non-resident. You then had to go into the temporary non-residency rules, okay? And you had to tell the examiner that because if she comes back after less than 5 complete years, she will have to pay CGT on her gains. So you recommend that she stays abroad for at least 5 complete years. Now, the other thing I'd like you to understand is the closing year rules. Now, with regard to the final tax year, do we have a fixed basis period for the final tax year, guys? Yes or no? No. Some of you are getting tired, okay? Some of you are getting tired. Just keep on moving, guys. No, we don't have a fixed basis period. In the final tax year, what we do is we sweep up all remaining profits to cessation. And what we then do is, what do we deduct from the final year's assessment, guys? What do we deduct? Overlap profits. Well done, Belgian. Well done, Belgian. Good. Well done, Said. Well done, Esther, Emma. Excellent. That's what I wanted you to tell me. So make sure all of you know your closing year rules, okay? So with the closing year rules, in the penultimate tax year, penultimate means second last, we tax under CYB. We've then got the final tax year. And in the final tax year, we sweep up all remaining profits to cessation into the final year. And once we've swept them up, we then deduct overlap profits, okay? So that's what we needed to do here. We had to sweep up all the profits for 17 months, and then we deduct overlap profits. Now, I just want to show you one thing the examiner said here. Is what he said is that Freya and the company are going to make a succession election. If you make a succession election, do we have any balancing charges on the assets that are passed? No, no. But then what he told you is the car is going to be taken out of the business by Freya. So are we going to end up with a balancing adjustment on the car? Yes, yes. So the whole point for you to understand here is because she took the car out of the business, what you can see here is for the main pool, there's going to be no balancing adjustment because the succession election would apply. But with regard to the car, because she took the car out of the business, we are going to have a balancing charge. Now, because this is negative, do we add it to profit or deduct it? Add or deduct, guys? Add. Excellent. Well done, guys. Yeah. So what you had to do is add the balancing charge to the final year's assessment and then deduct overlap profits. Did all of you get that? Yes. Now, if Freya had transferred the car to the company as well, would we end up with a balancing charge on the, here? If the car had passed? No, it would be covered by the succession election. Okay, so I wanted you to just pick that up here. Good. Yeah, I think that's it for that question there. Let's check and see if I wanted to cover anything more with you. Yeah, that's done. Ties, that's done. Yeah, fine. Okay. Okay, guys, would all of you like to look at question 3, which is Amelia? Now, when you're doing the exam, guys, do you have to try and do all 4 questions? Do you have to try and do all 4 questions? Yes, yes. What do you think would be a reasonable result in the exam? How many questions do you need to get through to pass the exam? Yeah, I have to be honest with you, Carla, Chiela, and so on. It doesn't always happen, okay? So for all 4 really, but yeah, James, I would say 3.5. Are all of you happy with that? So you have to try and do at least 3.5. I've had students who only do 3 questions and pass the exam, okay? Yeah, but Chiela, I've actually had many students who only do questions 1 and 2, okay? They only do questions 1 and 2, and they actually get 50 out of 65, okay? Because questions 1 and 2 are the areas that you can score high marks on, okay? But they take time to do. But if you know your stuff, you can. But what I'd recommend you guys do is try and do at least 3 or 3.5. If you do 3 and 3.5, you're giving yourself a very good chance. Okay. So here, what we've got is, now when you're looking at the 20-mark questions, you always read through the start of the question first, okay? So here you don't read the requirements, you read through the start of the question, because the examiner said in the 20-mark questions, he'll tell you exactly what the question is about at the start. So what he told you here is Amelia is a sole trader. She's seeking advice in respect of the loss incurred by the business, the tax implications of replacing a warehouse, and deregistration for value-added tax. So in terms of Amelia, if we think of the loss, can any of you tell me in which tax year Amelia can use up this loss that she made for 31st of December 2020? So 31st December 20, yeah. Good, very good, yeah. So well done, Hilda, well done, Chiela. So you can use up the loss in the tax year 2021, okay? Very good. Are we also allowed to use up the loss in the previous year, guys? Yes, very good. Now, when you're dealing with a sole trader, do you have to claim loss relief in the current year first, or are you allowed to claim loss relief in the previous year first? Which year can you claim loss relief in? Current year or previous year? First. Okay, good. So this is one thing I want to clarify. With companies, you must use up the loss in the current year first. But with sole traders, you can use up the loss in either the previous year or the current year. When Amelia offsets the loss, yeah, so be careful with that, Chiela. That's what he was getting at here, actually. When she offsets when Amelia claimed, yes, it's optional, Carol. Yeah, sole traders have a choice. When she offsets the loss, is she going to offset the loss against total income or against trading profits in the current year and the previous year? Total or profits? Nawaz, excellent. Well done, Bushra. Well done, Hilda. Yeah, it's going to be total income. When she carries forward the loss, will she carry forward against total income or against trading profits? Carry forward. Excellent, good. So remember, for sole traders, when you carry forward, you only carry forward against profits. It's not like companies, okay? So that's what your examiner was getting at here. So let's review our sole trader trading losses. So with regard to continuing sole traders, we offset the loss against the total income of both the current and the previous tax years. So we offset the loss against the total income of both the current and the previous tax years. And can we use up the loss in the previous year first, guys? Can we use up the loss in the previous year first? Yes, yes, we can. Yeah, we can use up the loss in the previous year first. Remember, when you claim loss relief for a sole trader, this is an all or nothing claim, and it usually results in a loss of our personal allowance. So with our personal allowance, if you don't use it, you lose it like your what, guys? Like your muscles. Well done. Yeah. So if you don't use it, you lose it like your muscles. Now, if after offsetting the loss against total income, you still have a remaining loss, what Amelia is allowed to do is she's allowed to take the remaining loss and offset against the capital gains of the same tax year. Okay, so after using up the loss against total income, if you've got a remaining loss, you can offset it against the capital gains of the same year. And then finally, you carry it forward against your future trading profits of the same trade. Did all of you get that for sole trader trading losses? Yeah. Did you find that useful? Okay, so it's very important. Let me tell you a trick to passing advanced tax. The trick to passing advanced tax is to know the difference between company losses, company trading losses, and sole trader trading losses. He loves examining this. It comes up in every exam, okay? So make sure you take time to see the difference there. Now, the other thing the examiner gave you in this question was a capital gain. Sorry, Herman, what do you mean by this gains restricted to 50% of income? Oh, I see what you're doing. I see what you're doing. No, yeah. When you offset the loss, what Herman is trying to say is when you offset the trading loss against other income, you can't, just remember, Herman, you can't use up more than £50,000, okay? The 50,000 is given to you in the question, yeah. Okay, guys, the other thing I want to cover with you is taxing an individual's capital gain. So we had to deal with Amelia's capital gains as well. When you tax the capital gain, you always tax the capital gain as the top slice of income. So you add the capital gain after the dividends, okay? So the way we tax income is we start with the non-savings, we then bring in the savings, the dividends, and right on top, we put the capital gain. If the gain falls in the basic rate band, what we do is we use a rate of tax of 10%. If the gain falls above the basic rate band, we tax the gain at 20%. For residential property, so Amelia here had residential gains as well. So with residential gains, the gains in the basic rate band are taxed at 18%, while the balance is taxed at 28%. Okay, so for residential property, the gains in the basic rate band are taxed at 18%, while the balance is taxed at 28%. So in order to minimize the CGT liability, what we always do is we give the capital losses and the annual exemption. So with the capital losses and the annual exemption, are we going to allocate these to the normal gain first or the residential first? Normal or residential? Residential. Thank you, Rhea. Thanks, James. Yeah, you always have to give it to the residential gains first because these gains are going to be taxed at the higher rate. Yeah, to save a high amount of tax. And the CGT liability for the year is payable in a single installment on the 31st of January following the tax year of disposal. Okay, so when we pay our CGT, we just pay in a single payment on the 31st of January following the tax year of disposal. Do all of you guys feel comfortable with CGT for individuals? Yeah, very good, yeah. What I like to do as well is the other thing the examiner brought in here was a little bit of rollover relief. And the idea behind rollover relief is the gain on a business asset like a freehold building or goodwill can be postponed if the sale proceeds are reinvested in a replacement asset. So if you remember earlier on, I covered Entrepreneurs Relief with you and Incorporation Relief, and some of you were asking me about rollover. So I didn't want to cover it then because we had to do it in Amelia, question 3. Yeah. The replacement must be bought in a period 1 year before to 3 years after disposal of the original asset. Okay. So the interesting thing here is Amelia was reinvesting the sale proceeds. And both assets must be used by the same taxpayer in any trade. Now, the interesting thing here is the warehouse that Amelia had, she was using 3 floors in the trade. So with 75% of the gain, could we postpone that under rollover relief, guys? Yes. Were we allowed to postpone 25% of the building that she was renting out? Could we postpone 25% of the gain? No, we couldn't. Yeah, absolutely. Good. And the other interesting thing to pick up in this question is because Amelia was not reinvesting all the sale proceeds, part of the gain would crystallize immediately. Now, what your examiner told you in this question is she was also planning on reinvesting in machinery. Can any of you tell me why Amelia could not postpone a gain under holdover relief, even though she was buying some machinery? Why could she not do that? No. It was not fixed. Well done, Herman. No, yeah. So the key thing, as Chiela and Herman said, is it must be fixed. So remember, for holdover relief, it must be fixed plant and machinery or a leasehold building. So here the examiner did not tell you the machinery was fixed, so you could not postpone the gain under holdover relief. Okay, guys, are all of you ready for a simple quiz? Is everyone ready for a simple quiz? Yes, okay. Absolutely, no, you had to tell him about the fixed plant, right? Here he told you it was movable, James, and you had to tell him that if the plant was fixed, then we could postpone the gain. Is that okay, James? Yeah. Okay, guys, we've now got a simple quiz, and I want you to start doing that quiz, okay? So have a go at doing this little quiz here that we have. It's anonymous, guys, so don't be frightened. No one's going to tell you that you got the answer wrong. It's completely anonymous, okay? So I want everyone to join in the fun. Okay, just 1 or 2 minutes to finish that off, guys, and then we're going to go through it together, okay? So guys, I can see which of you have not done it, okay? So 24 of you have done it, so we're still waiting for 5 people. Come on, guys. We have places to go and people to see, okay? Oh, Ray is saying, you can only do questions 1 and 2. It won't let me scroll down. Oh, sorry. Is that okay, Ria? Sorry, it was my fault. Maybe it was my fault. Okay. Still not letting me. Never mind, Ria. I'm sorry. Ria, it's not me. It may be something to do with Zoom. Okay. It's not me. It's something to do with Zoom. Sorry about that, Ria. So Ria, you can just, join in. Sorry about that. Yeah. Yeah. So guys, it's 3 minutes. I'm only going to give you 10 seconds more. Okay. So I'm sorry about that, Ria. Maybe Ria could not do it. Ria was one of the 3 people who didn't do it because maybe she had technical issues. Okay. So I'm sorry about this. This is a problem with Zoom. It wasn't me. Okay. Okay, guys, let's look at this together. If you expect to make a loss in the overseas operation, is it better to set up a company or a branch? Okay, 85% of you said branch. That's absolutely correct. Okay, so if we set up a branch, what we can do is take the branch losses and offset them against our UK profits. Well done. Okay, question 2. When you make a lifetime gift, Ria, if you could not answer any questions, just type in your answer into the chat box, okay? So if any of you want to type in your answer in the chat box, that's perfectly fine as well. If you make a lifetime gift to the trust and the donor pays the tax, what rate of tax do you use when computing the tax, guys? 25%, absolutely spot on. 78% of you got that right. Well done, guys. That comes up in every exam. Okay, question 3 now. When looking at CGT groups, what should the indirect shareholding be? 74 of you said 51%, and 26 of you said 75%. Very good. It should be 51%. Well done. So most of you got that right. Okay. Yeah, well done. So Ria, you can just answer these. The next question I had, if an individual, oh, sorry, I have to end it maybe. Yeah, sorry. Oh, sorry. If an individual owns 51% of a quoted company, what percentage BPR can be claimed? Is it 100 or 50, guys? 100 or 50? Quoted shares. Yeah, remember, quoted shares is always 50%, okay? So with quoted shares, it should always be 50%. Question 5. Good. I was happy. 85% of you got this right. If a UK domiciled individual goes abroad for 5 complete tax years and sells the UK assets while abroad, so that's question 2 in this exam, was any CGT payable on the gains? Absolutely no. And as we said, if she comes back after 3 years, do you have to pay CGT on the gains? Yes, yes, absolutely. Okay, and then one thing I think could come up in this exam for us in March is partial exemption, guys, partial exemption. So with partial exemption, for partial exemption, input VAT relating to exempt supplies can be claimed back. Which answer did you go for, guys? A, B, or C? What do you think? A, B, or C? Okay, so you have to satisfy 2 conditions. So remember, with partial exemption, you have to satisfy 2 conditions. It should be less than £7,500 per year and less than 50% of the total VAT. So one thing I can see from this quiz is some of you have to do some more work on VAT. Is that okay, guys? Okay, so make sure all of you. So Hilda, it's A. The correct answer is A, okay? Because it's 2 conditions. Can you see that? For B, it's only less than £625 per month. Yeah, so the correct answer there is B, is A. Okay, guys, did all of you have some fun? Did everyone have some fun and enjoy that? Yeah, good. So this is what I'm trying to show you guys. Just have fun with it, make the most of it, and all of you guys are going to pass, okay? So, so we've done a little quiz. And like I said, you know, I'm in the process of writing up my, of making these tax notes, making these memory joggers available to you. So I'm going to be sharing some of them with you today. And for people who are looking to sit the exam in June onwards, they should be published by then, okay? So you'll be able to pick them up, okay? Some of you want all my notes now, okay? Some of you want all my notes now, okay? Oh, you're talking about the sessions. We're looking at that. I'm looking at that, but I just have to look at the logistics behind that, okay? So I will let you guys know if any more sessions are planned, okay? Okay, guys, so let's crack on. We've still got to do a little bit more stuff. We haven't finished, so some of you are ready to go because you can see it's taken us a bit longer. So I'm doing a bit more with you. Yeah. Yeah. So let's just do a little bit more, guys. We're nearly there. Okay. That's why I gave you the quiz, just for you to relax a bit. Okay. Because we are covering quite a lot of technical knowledge. Okay. Just to give you an example, normally on a revision course, in a whole day, we probably do about 5 questions, but we actually go through it in more detail, okay? But what I've done is I've done a whole exam with you in about 2 hours, which is pretty good, okay? Okay, so let's take a look at question 4 now, guys, okay? Okay. Yeah, well done. We haven't finished. We haven't finished. I hope all of you feel it's been worthwhile. Okay. I've tried to give you as much value as I can. The good news, guys, is that if in the future, if in the future Kaplan decide to do the sessions, the good news for you is the sessions might be free, okay? Because obviously if I do them now, I have to pay lots of things. But that's why I had to charge a little bit to cover my costs, okay? But if Kaplan do them, they might be free as well going forward, yeah. So I'm looking at the logistics behind that. Okay, so what we're asked to do here in question 4 is we have a close company. So the question I have for you, a close company is one that's controlled by how many people? Close companies, guys. 5, excellent. 5 or less, excellent, okay? So what we're told here is this company has got 6 directors, okay, here. Now, with regard to a close company, so it's 5 or less individuals. Do any of you guys know what we call these individuals that control the close company? No, Hilda. Hilda, don't say directors. No, no. Yeah, Badresh is correct. Badresh is correct. We call them participators. Participators. Now, if the close company gives a loan to one of the participators, do any of you know what rate of tax the close company must pay on the loan? Chiela, yeah. So Chiela, a close company is one that's controlled 51% ordinary share capital by 5 or less individual shareholders. Okay. Very good. It's 32.5%. So in other words, what HMRC is trying to say with a close company is people were setting up the close companies. What they were then doing is giving loans to the shareholders, and the shareholders were not paying back the loans. Okay. So as a result, what HMRC said is we have to treat the shareholders as if they got a dividend. Okay. So we treat them as if they got a dividend, and we know that higher rate taxpayers pay income tax on their dividends at 32.5%. Now, the question I have for you is, if we satisfy certain conditions, we do not have to pay the penalty tax on the loan. Can any of you tell me what any of the conditions are? The loan should not exceed what amount if the loan is not more than what amount? Not 10, James, it's 15,000, guys, okay? So some of you have to remember that the loan should be less than 15,000. The shareholder should not own more than what percentage share capital? Look at my hand, look at my hand, 5%, good. And the last condition, no, it's 5%, Bryony, okay? So Bryony, it's 5%. And the last condition is you must be working for the company on what basis? Full-time, good, okay? So let's take a look at close companies now, guys, okay? So close companies are companies controlled by 5 or less individuals, and we call these individuals participators, okay? So these individuals that own the company are called participators. And what happens here is we treat close family members who are called associates as one person for the 51% test. So what many people were doing is they were setting up close companies and then trying to avoid the rule by giving shares to their family members. So what HMRC decided to say is the individual and their family members are treated as one person for the test. So consequently, if you set up the company, what happens here is the close company must pay tax on the loan to the participator at a rate of 32.5%. Now, you only have to pay the penalty tax of 32.5% if the loan is outstanding when, guys? So you only pay the penalty tax if the loan is outstanding when? Well done, Stas, yeah. It's outstanding when the corporation tax is due, okay? So if the loan is outstanding 9 months and 1 day, after the end of the accounting period, you have to pay the penalty tax. But what HMRC have said is they will refund the penalty tax if the loan is repaid or written off. So if the shareholder gives back the money to the company or the company writes off the loan, then we do get back, HMRC will give you back the penalty tax. Now, there's no penalty tax payable if 3 conditions are satisfied. So there's no penalty tax payable if 3 conditions are satisfied. And do we need to satisfy all 3, guys? Do we need to satisfy all 3? Yes, yes. So the 3 conditions I want you to learn for the exam, because the examiner does like close companies, is the first condition is the loan. No, Carol, I'll cover your question in a minute. The first condition is the loan should not be more than £15,000. Secondly, you have to work full-time for the company. And the third condition is the individual owns 5% or less. Okay, so as long as you own 5% or less, you work full-time for the company, and the loan is not more than 15,000, then you don't have to pay the penalty tax. Okay, so Carol asked us an interesting question. If the company writes off the loan, would the shareholder get a dividend, Carol? If the company writes off the loan, would the shareholder get a dividend? Yes. Well done, Badresh. Well done, Bryony. Do we have to pay income tax on dividends, which would normally be 32.5%? Yeah? Yeah, absolutely. Yes, yes. So all we're trying to say here is if the company writes off the loan, even though HMRC will give the penalty tax back to the company, all that happens here is the shareholder would then pay income tax on the dividend. Okay. Do all of you feel you've understood closed companies? Yeah. Yeah. The last thing I want to cover with you briefly, okay, just before we finish off, is tax-free benefits, tax-free benefits. Do all of you feel you've got some space left in your brain, okay? So I'm pushing as much knowledge in there as possible because I'm trying to get you through the exam, okay? Now, one thing I want to show you guys, okay? Yeah, your brains, this is the thing, Kevin. So I want to show you how I teach at Kaplan, okay? So there are several of my students in this class, Carol, Rhea, and so on. What I'm trying to show you at Kaplan, you know, when we teach, you know, the way I teach tax, we don't waste time, guys, okay? We're on the ball, okay? We're on the ball, we're cracking on, we're doing stuff, okay? And what all of you should feel is that as long as you focus, what I'm trying to show you is focus on the key essential knowledge, you can pass the exam. That's what I'm trying to show you. Your exam in March should not be any more difficult than this exam. Okay, good. So I just want to cover some tax-free benefits with you because the examiner did put some tax-free benefits in here. Firstly, in-house gym, staff canteen or nursery. Do any of you have a gym at work? Do any of you have a gym at work? Okay. No, Carla does. Carol has got a gym, so Carol can, you know, go running on the treadmill at lunchtime. Carol is very lucky. Next, relocation expenses up to £8,000 per employee. So if the company relocates you, they can give you up to £8,000 per employee tax-free. Medical insurance up to £500 per employee, okay? So that's where they're paying for treatment for you, okay? And one mobile phone. Do any of you guys get a mobile phone at work? Does anyone get a mobile phone at work? No, okay? So yeah, Kaplan don't give me this iPhone 12, okay? So Kaplan were giving me an iPhone 4, but I said no, okay? So they were offering me an iPhone 4, so I said no. But there we are. If you're lucky enough to get a phone from work, even if you use it for your private calls, it's a tax-free benefit. Next, car parking, work buses or bikes. So if they give you car parking, work buses or bikes, that's a tax-free benefit. Overnight expenses up to £5 per night in the UK or £10 per night if you're working overseas. Okay. So here, these are incidental personal expenses you might have, you know, for example, you know, you might be staying in a hotel and you might need to pay for Wi-Fi, that kind of stuff. Trivial gifts for personal qualities, that's something new that has not been examined, okay? Trivial gifts for personal qualities. What do you mean outdated, Stas? What do you mean for outdated? Remember, don't think this covers the, Stas, don't think this covers the hotel or the food. Okay, here we're talking about incidental expenses. Oh, are you talking about Wi-Fi, stuff like that? Well, some hotels, to be honest with you, many hotels, they offer basic Wi-Fi, which is not reliable, and they offer proper, you know, broadband, state-of-the-art, and they ask you to pay for it. Yeah, unfortunately, yeah, there we are. Yeah, okay. So yeah, so you might incur some costs. Yeah. And even places like, you know, Travel Lodge and places like that, you know, they don't give you proper Wi-Fi really. So trivial gifts for personal qualities up to £50. And lastly, home worker expenses of £6 per week, okay? Oh, sorry. Now, by the way, guys, I've updated this for the new Finance Act. For your exam, the home worker expenses are only £4 per week. Okay, so remember, because you're working from home, you're allowed to claim for expenses that you might incur. Okay, guys, I would like you to then carefully, so I've gone through this. Yes, of course, yeah. Let me clarify that. So what we've done so far, guys, is we have covered quite a few different elements, okay? So what I like to do now is have all of you connected with me on LinkedIn, guys. Have all of you connected with me on LinkedIn? Yeah. So make sure you connect with me on LinkedIn. I do put lots of stuff up there. Okay. So lots of free stuff up there. There's lots of stuff there. And also you can visit my website, which is neildacosta.co.uk. There's lots of free stuff up there. If any of you want this presentation that I did, which was passing ACCA Advanced Tax. If any of you didn't come for that, you're more than welcome to just send me an email and I'll send that to you. Okay. Okay, guys, any further questions before we wrap up? Any further questions before we wrap up? So if any of you want that, just drop me an email or connect with me on LinkedIn. Likely questions in March. Okay, so this is very brief, Stas, okay? Very briefly, but I do think that in March, we should have, I'm expecting to see a lot more groups, okay? So he hasn't done serious groups. So I'm expecting groups with anti-avoidance rules involving takeovers and so on. And I also think areas like opening year rules, okay? Areas like opening year rules with losses. He does like that. He did do a bit of it in December, but I still think that opening years are important. Make sure you learn all the reliefs, okay? So make sure you know all the reliefs, all the different CGT reliefs as well. VAT, make sure you know things like, you know, the partial exemption scheme, the capital goods scheme, option to tax, which is what I covered. And he likes registration, okay? So if he does a new business, this time in March, I'm expecting a commencement. So I think probably a new business coming up with regard to compulsory VAT registration. Yeah, there's a little liquidation. I didn't like that. Oh yeah, by the way, guys, the other thing I'm expecting to come up is personal service companies. Okay, so maybe probably something on personal service companies or a company buyback of shares. Okay, any questions before we wrap up? Any other questions? The order to attempt the questions. Yeah, I would always do the compulsory questions first, guys. Okay, so always do the compulsory questions first. Start with the 35 marker and then do the 25 marker, because the examiner does give you, he does give you marks for presentation, and he gives you 5 marks for ethics as well. Yes, fine. Yes, I am going to be sharing this. Sorry, what happened there? Sorry. Yeah, I'm going to be sharing this. The last, yeah, James, so you will receive stuff, yeah? So what Zoom do is they do an online recording for me. And once they send that to me, I will forward that to you guys. The other thing I would, yeah. Naran, I'm giving you a lot of stuff, okay? You're getting a lot of stuff, okay? Good. This is quite a lot of stuff to absorb, actually, okay? Obviously, I can't give you the entire complete set of, there's loads of notes here and so on. Good. Yeah, I hope all of you enjoyed the session and it's been useful to you. The last point I want to cover with you here, you know, I'd like to wish all of you the very best of luck, okay? All of you just want to drop me an email on that. I'll cover that with you. I'd like to wish all of you the very best of luck in March. And I hope I've given you the confidence that you need to pass the exam, okay? And what I want you to do is follow my advice, focus on the essential knowledge that you need, try and attempt as many exam questions as you can. Please get comfortable with the ACCA software. You know, make sure you're comfortable with doing all that. And I have no doubt all of you will pass the exam. And I look forward to seeing some of you in the future on some of my courses and meeting you, okay? So all the best, guys, okay? My pleasure, everyone. Yeah, lovely meeting you.